Day one of the federal government shutdown and the stock market rallied. What's going on there? Actually, there was another economic indicator that came out that really pushed the stock market. The stock market, of course, did hesitate prior to this, selling off all through the night. Then we got the ADP unemployment numbers, and what they showed were revisions from previous numbers to the negative, meaning the economy is losing jobs. And the stock market rallied. But why? What's going on there? It's simple. The Federal Reserve now has a lot of leeway to lower interest rates further, which would stimulate the economy. But there's something much bigger going on here, and this is really what's going to push asset prices across the board. Real estate, stocks, gold, Bitcoin. What's going on there? Real simple. As the Federal Reserve lowers interest rates, this will expand the money supply. And with the money supply expanding, this becomes inflationary. What the Federal Reserve is going to be trying to do is deflate the current debt. The government is printing some $4 trillion in debt this year. Over the course of years, the Federal Reserve will be able to depreciate that debt, taking the sting out of what is owed by you and me, the taxpayers. So while we are going to see that depreciation in the sting of the debt that we're seeing, the money supply expanding would push stocks and other assets higher, but we're going to have to pay for it in higher costs across the board. Make certain to follow along because there's more economic indicators that are going to show up that will perpetuate this, and we should see the stock market continue to rally along with inflation.